the way that we're going and the adoption in Bitcoin, that just 4.8 million just doesn't not seem unreasonable to me at all for 2036. I'm an applied economist, so I really pay attention to supply and demand. I think you need to look at the flip side all the time that, do you really believe that the US dollar is going to collapse? From a Bitcoiner perspective, is that our demand curve, we can tease out low and high time preferences. So the trader versus the hodler, we can actually model what the impact of that is now on prices. That intersection of supply and demand where markets clear, can we track that over time, and can we predict where that is going? That's what this paper really tried to get at. There's still 13 million coins in there that we don't know whether they're lost or whether they're held for long term, if they'll ever come back to market. If you look at Bitcoin, the supply doesn't adjust, market demand fluctuates up and down, and price goes where it goes according to market demand, whatever the market sentiment and the fundamentals are on the market side.
Hi, Murray. How are you doing?
Hey, Robin. I'm doing good. How are you?
Really, really good. Yeah, I'm so excited to have you back on the show. It's been a while. It's that we just talked about. There was some dip last time we talked. maybe there's again something happening.
Yeah, well, hopefully it doesn't go down too much farther. But it's Bitcoin, so it does what it does.
Yeah, I always hope a little bit. I don't know. Maybe it's because I'm super young and I want to have a lot of Bitcoin in like 50 years. But I always hope for like a dip. Like I'm like, let's a little bit down.
Well, it's funny because the price modeling that I do, gets really into some fairly sophisticated stuff. But when it comes day to day, I look at a weekly chart and we're in an uptrend. It's one thing to do price modeling in Bitcoin and get very sophisticated about it. But, the practicality is, I did technical trading back 30 years ago, and I sort of have a system there. But now all I look at is the weekly trend. That's all you need for Bitcoin. Just look at the weeklies, and we've been at the FTX crash back in 2022. We came down into a new trading channel, and we've just been grinding up in that for ages. So yeah, if that breaks down at some time, then I wouldn't say I'd be concerned, but I would take note of it. But other than that, I just ignore it. The price.
With weekly trade, you mean where we went in and if we went on a positive note out in the week?
Yeah, well, the weekly candle charts. So what our pattern is, and on the weekly, we're just coming down to a really strong long-term support band that just goes back to June 22. So I'm not concerned. If we could grind sideways from the looks of it for another probably 6 weeks or so. Before we really, if we maintain the current level around 110,000, we would probably hit the band in about 4 or 6 weeks. So we could dip down below it a little bit, but hopefully once that happens, it pops back up pretty quick. So I wouldn't be surprised to see $100,000 price. Maybe we will, maybe we won't.
Interesting. And why did you why is the weekly trade and the weekly insight so important?
It just smooths things out. How people freak out in the Bitcoin space. Here we are, we're at 110,000 and there's just panic and it seems out in the markets over this Bitcoin crash. And, I understand that if you just bought Bitcoin for your first time at 122,000 and you're down 10% in basically a week, you're going to be a bit uncomfortable with that. But for anybody that's been in it, I think the longer you're in it, you just don't pay attention to all the gyrations that happen. There's just too much going on in the market that you don't understand. So I like the weekly or even looking at the monthly charts, and that's the only charting I do now.
I also don't think there's a lot you can really lose yourself in all the charts. You can really get really deep into that. And at the end of the day, I have a very easy model. I just buy Bitcoin when I have money.
Yeah,
when I
yeah.
have sources available, I just buy Bitcoin whenever this is. If it's high, it's high. If it's low, it's low. Like I actually try to time it, and I try to use some metrics, and I was terrible at it. I was impatient. I'm not a good trader. I would be terrible at it. And so I was like, my strong suit is just like hold on to it for the long run.
Yeah, well, I mean, there's it's so hard, like because we're with Bitcoin, we're into this situation where we have futures and options, and there's the institutional buys, and who knows what's going on behind the scenes right now. We're seeing these weird things, like there's a lot of the OGs, probably the OG miners that are bringing old Bitcoin back into the market. So maybe they're cutting some sort of deal with the treasury companies. Maybe it's a share for Bitcoin where they're getting more shares. They sell their Bitcoin, then they can actually buy back some of it. Like, who knows what's going on. And that's one of the things I think. And then there's bot trading, and there's all sorts of technical people and hedge funds and, trying to short things and spreads. And like, you just, as somebody that's not professionally involved in the market, like absolutely full time with all the resources, I think it's just a folly to try to trade it.
I agree. And you're doing a lot of research, a lot of great papers that you're bringing out, and research that you're doing. And I saw that I mean, I did not read the whole thing, but I read the abstract of it, and I read some of it. Can you maybe summarize, because I think it's interesting what you've brought with the supply and demand and the price things in there, what you have done there?
Okay, yeah. So the price modeling paper, yeah. So this is the second version of it. We did the first version, which I think may have been out by the time we last talked. But so from a fundamental perspective, I'm an applied economist, so I really pay attention to supply and demand. And what Bitcoin is its unique point is that it's has a completely inelastic supply. So if you look at Bitcoin, the supply doesn't adjust. Market demand fluctuates up and down, and price goes where it goes according to market demand, whatever the market sentiment and the fundamentals are on the market side. Our traditional finance world, really, in central banking, is the complete opposite, in that the money supply is extremely elastic, and the money supply adjusts back and forth to try to meet government targets for inflation and unemployment. And so it's interesting to take a purely economic perspective to try to tease out, like, what are the real implications of Bitcoin, and how do we can we predict price based only on supply and demand? So every day or every week, the supply is in one spot where we pretty well know where it is, subject to some important qualifications about liquid supply. Demand, we don't know where it's going. And like we just talked about, it goes up and down all over the place. But that intersection of supply and demand where markets clear, can we track that over time? And can we predict where that is going, sort of on the big scale, never mind all the minor fluctuations? So that's what this paper really tried to get at. Now, in the first version, there was a couple of things that we realized and acknowledged we were probably a little bit uncertain about. And one was the particular utility function or the demand curve. So we did some improvements to that. And what's really interesting, what I really like now from a Bitcoiner perspective, is that our demand curve, we can tease out low and high time preferences. So the trader versus the hodler, we can actually model what the impact of that is now on prices. And then the other thing in the first model that was a bit of a constraint was, well, quite a bit of a constraint was, I had in there that Bitcoin purchases, is the price of Bitcoin went up, the number of Bitcoin that were being purchased and taken out of liquid supply was the same. So, if Bitcoin price was $100,000, there might be 1,000 or 2,000 coins coming out per day. But if it was $1 million, there was also that same amount of Bitcoin coming out of the market. And that doesn't really make sense. So I wanted to make sure that we got that in line. And that's what this paper does. I had it in basically it was a dampening factor to reflect budget constraints and market frictions. And we wanted to see, in this case, if we eliminated this possibility of, the straight up hyperbolic price appreciation, or if it was still a real, I call it a risk, but that depends on your perspective, either a risk or a benefit. So that's a little bit complicated. So if you have specific questions, maybe jump in, because it's like, as you probably skim through the paper, the math is pretty dense on it. And it's a fairly complex model right now in its mechanics, but the key message is that it's absolutely based in supply and demand dynamics. It's just, every day we churn along, we take a little bit of liquid supply out of the market that goes to reserves. A new bit comes in from, of course, from mining. And we have all these uncertainties, and this model also now accounts for uncertainties.
And this is the big thing always, because as you said, the supply side is known. We know how many Bitcoin there are and how many Bitcoin kind of will there be in existence. And then it's like, okay, what are the variables for the demand side? How is the demand side growing? Is it growing like the internet? How are people selling it? And this is like really interesting to think about, because it goes, I guess, a lot in human psychology and those models around like how does it actually grow.
Yeah, and this framework that I have right now, it doesn't go into all those market details. So right now I just have what in the model, it's a demand multiplier. So I calibrated the model back to the fourth halving, and then just up to the end of July when I was finalizing the paper. So we have a model that sort of it gives us the rough price trajectory since the fourth halving up to where we are, and then it projects off into the future. And so in this model, the demand function in it just goes up or down. I don't say yet why it goes up or down, but it opens the door for people to come in, and we can look at macro factors. We can look at money supply and all the typical macro factors, the Fed decisions that come in, interest rates. But it could also, in theory, be used. You could plug in a market sentiment type of model, which there's lots of those out there, into the demand curve. Maybe if you really wanted to predict more in the short term time frame. I'm not particularly interested in that. Like, what my interest is over time, what happens when do we enter a supply crunch or a supply shock? And if so, when does that happen? Now, so that's our demand side. It's a little bit, high level. It's abstracted right now, but there's no reason that it can't be fine-tuned later on with real market data. The supply side, though, and you said, well, we know how many Bitcoin there are, and that's true in aggregate. We know what the total supply is, but we have no idea what the liquid supply is right now. And so there's a really, really large swath of uncertainty, and I don't see any way to get around that other than to use like a modeling technique that actually embraces and uses the uncertainty, rather than trying to make some sort of assumptions about where we are. And so I've taken in this model, there's two parts to it. There's sort of a baseline that looks at the individual parameter interactions. And then there's what's called a Monte Carlo model, which incorporates uncertainty. And I've considered, I don't remember the numbers exactly off the top of my head, I don't think, but I think I've considered a range of 4 million liquid Bitcoin, or a Bitcoin liquid supply of 4 million up to 13 million. So probably the real number is somewhere in between. And, there's some people out in the field right now, or out in the space right now, that are saying, oh no, there's only 3 million liquid supply left, and we're coming into a supply shock. But I think what we're in particularly what we've seen over the past couple of months in the market is that all of a sudden a lot of these really old coins are starting to move. So we're getting people that are sitting on tens of thousands of Bitcoin that are starting to bring those back into the market. And maybe in the past we've assumed too many of these old coins are actually lost. So there's if we look at institutions and we look at everybody else that we know the supply of, there's still 13 million coins in there that we don't know whether they're lost or whether they're held for long term, if they'll ever come back to market. So my own feeling right now is that what we're seeing in the market, we're seeing some pretty large inflows that are getting absorbed. The new coins coming back to market, the old coins coming back to market are getting vacuumed up quite quickly. And then at the same time, we aren't really seeing that much of a price increase when we get some really big buys. And that, to me, suggests sort of a mix of things going on in the futures market, and also that we probably just have more liquid supply than we really think.
And it's also, I guess, really hard to predict, like, what is as you said, the liquid supply, because we do have. So, for example, I have a self-custody wallet where I could pay someone or move to somewhere like very quickly, but they haven't moved in a while. So it's like, is that the liquid supply? So like, it gets really hard to really know what's the liquid supply, because if you just take the supply on exchanges, yes, that's one number, but I do pay and earn in Bitcoin every single month, maybe even like week at that point. And then it's like, yeah, this is self-custody Bitcoin, and it does have some movements in there. But it could also be like, oh, it's self-custody, then it's not liquid. Then it's like, it's impossible, I guess, to really like know the liquid supply.
Yeah, it is impossible. And you look at what's happening, you're exactly like spot on in this. Like Bitcoin that's held in a wallet off chain, we have no idea what the motivations for that are. Is it a long-term generational saving account, or is it something that's part of the credit base? Are you taking now, probably not many people yet are actually taking loans, but maybe if it's safe to take loans, your Bitcoin is still able to sit in the wallet and be collateral. That way it's used that creates new money, and that new money can then be used to buy more Bitcoin. I mean, that's the MicroStrategy playbook right there. So yeah, we have somewhere between, like, what I'm assuming in this modeling is that we have somewhere between 4 and 13 million Bitcoin that's sitting off chain, but we don't know if it's liquid, if it's truly liquid, or if it's truly illiquid. And this model sort of, we can get later on in the model, I don't know if you looked through some of the summary charts, but I have in there, what's the way I frame pricing is, what's the probability that we'll exceed a certain price by a certain time? And that's for me, I think that's one of the main messages. Another main message is that even adjusting the model and putting this price sensitivity parameter into it to sort of like, what happens is if Bitcoin price goes up really quickly in the model, that means that there will be significantly less purchases of Bitcoin. And again, I have uncertainty built into that equation as well. But so if institutions come in and, the US government came in and said they're going to buy 1 million Bitcoin, and the price shoots up, all of a sudden the number of Bitcoin that are actually purchased falls down quite steeply, because the new price basically causes people to hit budget constraints that they can't go out and buy. You can't go out and buy 1,000 Bitcoin if it's like, $1 million or $1.5 million each. So there's that piece. But we still do reach these. We still do. So that takes care of a lot of the supply shock right there. And then we do have these scenarios where we still get supply shock and we still get these hyperbolic price increases. So we can't rule them out, but they seem, in this model, they're less common than they were in the first version, which makes sense. And we still don't know what the futures and derivatives markets, how they really play out, because again, back to the vertical supply curve, Bitcoin has a vertical supply curve, but what futures markets and synthetic exposure does is it basically kinks the supply curve right around where the price is. And so you have synthetics that come in and they can absorb some of the demand without actually using real Bitcoin. So it's a complicated situation, but I think we're taking in steps on how we model this.
Yeah, and then there's some really interesting charts in there, and there's a lot of them where you look at this. Also, where I think I saw one with adoption even in very early on, if I remember correctly, like those adoption charts. But just on like the small supply shock question before we get in all of like very interesting charts, what do you think is like the possibility even of a supply shock? Because I feel like if someone, for example, now bought Bitcoin at, let's say, $60,000 and Bitcoin shoots up to like $600,000, at some point people will start selling or like buying homes and buying Lamborghinis or like whatever. So this is always my theory and my thing with supply shocks. Like, don't people just like then at some point get so wealthy, especially the early holders, that like, oh yeah, like let's take some off the table and then get some more supply again in?
Yeah, and maybe that's what we're seeing right now with some of the original holders getting rid of coins. But I think that comes to the question. We look at reserves. So, you get the Michael Saylors of the world saying they're never going to sell. And so, yes, each round, people might have a price target, like a mental price target that they have in mind, that once it hits $1 million, they're going to like sell half of their Bitcoin or something like that. Everybody has their own sort of rules or guidelines. But if there's organizations out there and investors that every time somebody does sell, like these OGs do sell, somebody comes in and buys it, and that somebody actually holds their coins forever and uses it as the credit base or as collateral or as backing for bonds, then we're into this situation where like it's every round that Bitcoin circulates, you just keep getting some peeled off. Sorry, I've got a dog down here that's jumping on me.
Let's get him in the podcast.
Okay, into the podcast we go. This is Doug.
He's so cute.
Yeah. He's just hyperactive. He's just coming up to 1 year right now, and he keeps me well exercised. We go walking in the. So I live in Vancouver Island, and we go walking on the rainforest trails. Probably we get an average of 2 to 2.5 hours a day outside and on trails walking. So he's in pretty good shape, and it's helping me too.
Yeah, like dogs. I like my parents' home got a dog, and I grew up there, and like obviously, and we got a dog when I was like 12, 13 or something like that. And first I was like, I don't like to walk. Like, why should I walk the dog? But with like 16, 17, I slowly got the thing of like, oh, I actually enjoy walking the dog. Like first it was like a chore, and then it was like nice. And now I'm walking every single day without dog. Like I don't have a dog right now in the city. I want to have a dog when I'm a little bit outside the city. But I make sure like I walk every single day, and I love it. Like I try also to go to evening walks with my girlfriend, just like late in the evening, just like walking around. It's amazing. Walking around I think is one of the things that everyone can do. Most of people can walk around, and everyone that can do it definitely should do it.
Yeah, definitely. And one of the perks from walking a dog, and this is actually related to supply shocks. Now, there's a segue you weren't expecting, I bet. So we've had a drought here on Vancouver Island this year. It's like really dry, hot. We've had some fires in the area. Like there's been days where the inside of my apartment is like so smoky, you'd think you had a campfire going in the middle of the room. And But we've seen this coming since back in early May. It got hot here on the island and dry in early May. And so every time I take Doug out for a walk, he has his favorite places. So it's every time you go out, he has to wade farther out into the river to get up to his chest. Or there's these places where he used to jump in and chase frogs in a pond. And that's all just cracked mud now. And during these walks, I was thinking, well, that's really the perfect kind of analogy for a supply shock. You look up into the mountains and you see snowpack up in the mountains, but you can't tell from far away how much it is. And so we took a drive up to one of the old ski areas where I used to ski when I was a kid. And I got up there. This was at the end of May, and it was a lot of years and towards the end of May, you could still ski up there if it was open. There was enough snow. This year, it was just the barest patches left. So, you can see things, and you get these signs in the forest, like in the rainforest. All of a sudden, you're walking these areas, and the moss is a bit crunchy, and then the river's going down, and you think, oh my, okay, so this is how it's coming on, but it wasn't until the end of July, really, that we started to get the forest fires in the area where things started to spark and burn. And and I was just thinking that's a perfect analogy. And so I've got I've worked it into a whole book project right now, and it features Doug the Border Terrier, and the idea that out walking, that you see these signs, and you have to be watching closely, and you have to be making sure that you understand what the signs mean. But you can see it coming in advance. And I honestly think it's the best Bitcoin analogy I can think of. It's just that we know the supply shock is probably coming, with one caveat which we can talk about later. But it's coming. We know that every circle around, there's going to be people peeling off Bitcoin that goes literally into permanent storage. And so there's a really strong likelihood that supply shock does happen. It's an absolutely fixed supply commodity. The world has never seen that before. So it doesn't, we talked about this last time, I think, and to me, it just doesn't make any sense that we're going to not see some sort of really massive move up in the future. And the question then is, well, where does it actually, if that happens, where does it actually end? Because once the supply is gone, it's gone. There's nothing else you can do about it.
How much has actually, as you said before, strategy and those institutions that they don't look for selling Bitcoin, they just want to acquire as many Bitcoin as possible. And as long as they are liquid to do so, they will do it. Where when you look at Bitcoin 10 years ago, maybe 5 to 8 years ago, there weren't that many institutions and companies involved, like almost none. I mean, already now also we are in the early stages of that development. But they do change the price demand equation a little bit, I guess, where they just buy it no matter what. I don't think Saylor will slow down if Bitcoin is at 1 million, and he will just continue to execute his thing. Where if there's a blab, how the market was in 12, 13, 14, he might have sold or retired or used the money otherwise.
Yeah, and you look at particularly at strategy, and with their new products, with their replication of basically of a curve, like a credit curve. That's not the correct term. Anyway, with all the different financial products that they're bringing.
You mean yield?
Yeah, yield. Yeah. But all the different products that they're bringing in right now. So you might say, well, maybe Michael Saylor will keep buying forever. But say that they start taking MicroStrategy starts really seriously cutting into the bond market. Well, the bond market's a finite market. I mean, you're still if Bitcoin becomes this pristine collateral that can be used to siphon off the treasuries market or the real estate market, or the equities market, there's only a certain distance that can go, and so I don't know. Like in one way, I look at it and I think a price or a supply shock seems inevitable. But then the big question, I think, and this is actually another paper that we're working on right now, is what happens in the face of futures, derivatives, and synthetic exposure. And so there's this sort of cleavage to, does Bitcoin follow its traditional path, sort of, and its original ethos about being decentralized, about self-sovereignty? Is self-sovereignty really the thing that drives adoption forward? Or do we get into this world where we have Bitcoin gets financialized and absorbed by Wall Street, which it sort of looks like that's what's happening in some ways right now. And there's some within the price modeling paper, there's one really interesting thing that came up, and I'm not sure if this is some sort of mathematical anomaly or a modeling anomaly yet, but what it shows is that if we get into this heavy trade, so if we have this withdrawal sensitivity relatively high, well, actually, I shouldn't even say that. It's even in the medium of the range to the lower part of the range. If we have some sort of sensitivity where firms don't buy as much Bitcoin when price goes up, that can keep liquidity in the market. And particularly if the price goes up very fast, it can throttle back the number of purchases really quickly, depending on what's going on there. Whereas with a sort of like a self-sovereignty first view, what might happen is that Bitcoin in that type of world where there's not much financialization, where there's no paper Bitcoin, the price might go up slower, but what happens is that supply being removed is actually supply that is actually taken permanently out of liquid supply. And so there's this anomaly that came out in the modeling, was that you can actually have slower withdrawals of Bitcoin into reserves, or actually into probably more likely wallets, and the probability of some sort of hyperbolic price singularity actually increases when your withdrawals are lower over time up to a certain point. And with Bitcoin, if we look back to, say, 2017, 2019 period, the supply seemed to be like getting drawn down this whole time. And then once it started to go up into, like in the big bull run, there was just no supply that was available at that time to come back into the market and moderate. Now, eventually the supply showed up again, because once Bitcoin hit up into the $60,000 range, people were willing to sell it, like you said before. And if we look at historically at gold, we've seen in the 1970s, 1980s, there was this sort of similar process happening with gold, where it was slowly taken out of the market into private hands, and then there was a big squeeze. We've seen it also in silver, where derivatives also played into the picture with the silver squeeze. But yeah, it's like I follow the math, so I don't like, for me, I don't like put much weight on what's happened historically with Bitcoin price trajectories. I want to understand what are the fundamental mechanisms as we move forward, what's going to influence the price in the future. And there's many uncertainties that I think modeling wise we can deal with, but there's these sort of fundamental, it comes back to this very fundamental sort of the Bitcoin ethos versus the Wall Street ethos. And I think if we go one way, we're definitely going to get supply shocks. If we go the other way, maybe we will, maybe we won't, or maybe they'll be delayed. The thing with the derivative strategy and paper Bitcoin is it helps to fill that. It provides a means to fill demand and provide Bitcoin exposure until it doesn't. Like But when it like if it comes apart, then it's going to really come apart in a hurry. So I don't think you can still have a supply shock, I think, on if we go the Wall Street route, but that's probably because something else goes really, really wrong at the same time to kick that off.
That's super interesting. With daily withdrawal, you mentioned that in the sensitivity of that. Just to understand that, this is what you were talking about. Is this pretty also early in the paper?
Yeah, this is the price sensitivity. So this was just an example of how the parameters on the price sensitivity, this is the range that I used. So the curve down at the bottom just means that if we have that parameter for the bottom curve, it means that Bitcoin purchases are very sensitive to price increases. So if the price goes up, the number of Bitcoin drops. Number of Bitcoins purchased comes down quite quickly, whereas the top curve is the opposite. So there's quite a wide range of assumptions in there. And again, the uncertainty is all accounted for in the second model. So like in this chart, we see, I just assuming that there's 2,000 Bitcoin per day, like taken out of liquid supply as a baseline. What you can see is that it drops very, very quickly. So the higher the price of Bitcoin, it will cause a withdrawal or a decline in Bitcoin purchases. So think of it like at one end of the switch, it's like 100% Bitcoin. That's the only thing that determines what you're purchasing. At the other end of the spectrum, it's 100% fiat. Your budget constraint implies how many Bitcoin you can purchase. And then in between, we have these different curves that I use in this model to allow for some flexibility along that through that range.
I do love the watches from Coin Vigilante, but today I have a very special message, not from me, but from the CEO himself, Carlos from Coin Vigilante. Let's hear him.
To all the Robin Seyr podcast community, I'm Carlos Estrada from Coin Vigilante, and we're sponsors of the show, and we're going to give you a very special discount exclusive to you. 10% off your order at coinvigilante.com when you use Robin at checkout. We have really nice watches that you guys can buy right now for 10%. This is a transparency edition, beautiful watch. These watches are worn in over 55 countries and counting. This discount is just for you, exclusive to the Robin Seyr podcast. We have limited editions, we have limited productions. These watches come in very nice packaging, boxing material, and they are collector's item for Bitcoiners only. Enjoy the discount. Thanks for supporting the show and Coin Vigilante.
The most important thing for your Bitcoin journey is not buying Bitcoin, but it's how to keep them. And yes, you have maybe the right tools, but how do you actually go ahead and stick it all together so it's the most secure for you personally? Self-custody is a deeply personalized journey, and the Bitcoin way is helping you exactly finding that correct setup for you personally. They are also helping you with securing your own cybersecurity. And if you want to go one step above all that, you can even get a consultation for a Plan B residency. Go to thebitcoinway.com/Robin and you will get a 30-minute free consultation. I finally and officially mine Bitcoin. This is not just something to stack more Satoshis, but it's most importantly also to support the network. Individual miners are the ones that keep the Bitcoin network decentralized. And by the way, you get KYC free Bitcoin. That's why I use simplemining. I get an actual proper Bitcoin miner. They set it up for me. They repair it if it breaks down. And most importantly, they let me choose the pool and even connect my own full node. I'm completely sovereign and I'm completely in control, and I can sign up with Ocean, no account needed. I just give them a Bitcoin address and then there's mining going on. No KYC, nothing. So if you're ready to mine Bitcoin, go to simplemining.io, tell them you come from Robin, and let's mine Bitcoin together. I want to tell you about something very special to me. It's called Microseed. If you hold your Bitcoin in self-custody, and you should, you know how critical it is to secure your seed phrase. You should not have them on paper. You should not have them on anything else than titanium. With Microseed, you can engrave your 12 or 24 word seed phrase, the entire seed phrase onto a 1-inch small washer. Yes, just one washer. All 24 words on that one washer. You can hide that thing everywhere. And even better, you don't need to buy a new kit every time you have to get a new wallet. You can make unlimited backups because Microseed is not selling the washer. Microseed is selling the device that stamps the washer. So you get the full kit with the device, with the washers, with the hammer, with everything you need to get started today. And you can make with that unlimited amount of backups. Go now to microseed.io. Again, that's microseed.io to get your last backup tool you ever need. Interesting. And then also, I think the next one, and people, I think will appreciate that because the people always want to know, like, where's Bitcoin going? What is the expected market price? And those are like, you made a lot of like graphs of assumptions, and those are then consistent around the paper, which kind of lead to the Bitcoin price, I guess.
Yeah. Now, I actually wouldn't look at this chart for Bitcoin price, and the reason is that, like, a lot of the first, I have two parts to this paper. The first is exploring how the parameters interact with each other. So that's where this particular paper, or this particular chart, really has some fixed assumptions in it. So if you want to, I would scroll back all the way down to the bottom to table 15, which is page 26. Let's see if we can should be just up a little bit more. Okay, right there. That's the one. Where did it go?
This one?
Yeah, that one. So this is the accounting for all the uncertainty, and not just across liquid supply and that parameter that we just looked at, the withdrawal sensitivity, but across all the parameters in the model. So how many Bitcoin per day are taken out of exchanges, whatever else I had in the model, how fast, like how soon I forget after I've gotten onto other things for a few days. But all the uncertainties are all rolled into this price prediction right here. And so this one is saying, I like the 75% calm myself. That's where I feel most comfortable. Oh, yeah, you can't highlight individually, unfortunately. But so look at, just pick a year out of there and just highlight a row. Okay, for 2030, the model predicts that there's a 75% probability that Bitcoin price will exceed $2.27 million. And again, the hyperbolic price increases, they sort of skew this table a little bit to the right, which was like, I don't really pay much attention to the 10% and the 1%. You're getting these monstrous big numbers, but if price goes hyperbolic, you're going to get monstrous big numbers. But that also implies the US dollar basically dies. And I can't believe that myself yet. The numbers down in the 75% column, you're looking at, these are based on 10,000 simulations. So what happens in a Monte Carlo model is every uncertain parameter in the model, say for instance, liquid supply, one run of the model, it will be 3.5 million. The next run of the model will be 10.35 million, and so on like that. And so what we get with the Monte Carlo model is we get a complete sampling of the entire parameter space. So you just mash up and like put anything that's like you think in the realm of feasibility or plausibility into the model. You run 10,000 simulations, and then you were able to come out with these probability bands. So what this tells us, 2.27 million in 2030, which I actually think, if I like giving my personal opinion, I like basing on the math, like I said, but like to me that makes sense. And you'll probably have listeners at this time, like when they see the pod, go crazy and like think, well, that's ridiculous. But I think what's also, if you look at that 75% column, what does it predict like leading up to that? Well, this year it only predicts 190,000. And now 190,000, given we're at 100,000, that's, we're 4 months away. That's in the realm of possibility. Maybe we won't make it. Maybe we will. There's probably some people that would be complaining like crazy if we only make 190,000 this year, thinking it should be higher. and then you look 410,000 end of 2026. That doesn't sound that unreasonable. 730,000, and you creep up, and you have to remember, like, this is the, back to the Doug analogy and the walking analogy. We're in this supply shock, potentially into a supply shock scenario, and we're saying, okay, like, we're creeping up by 200,000, then by 300, then by 400, then by 500. I hadn't actually looked at it like that before. So we're getting this incremental increase every year. It's not crazy. And I think that the 75% column probably should be pretty representative of what happens if we end up being like in this financialized world where Bitcoin's really integrated into mainstream finance and governance. And could we go higher? Absolutely, we could go higher. And the irony is that those big numbers out on the right-hand side of that chart, they're more likely if we have fewer withdrawals. It seems like they're more likely if we have fewer withdrawals. If we were to have like a Bitcoin maxi only world where it's completely sovereignty first, the likelihood is actually more that we end up on one of the right-hand columns than the 75% column.
With more maxi world, you mean where there's just like people are intolerant with the dollar and just use Bitcoin as their money?
I maybe not even using it as money, like as in a medium of exchange, but they're intolerant, is unwilling to accept paper Bitcoin in the market. Like, I don't know if that's for Bitcoin advocates who believe that that's the way to go. I don't know if there's any way to actually do that. So we have all these. I don't like the word subtleties. It sounds like I'm talking like an AI, but there are these subtleties in here that they're hinting at different things, and like, absolutely, this model is not complete until it integrates in the futures and derivatives in that supply side. But yeah, to me, like that 2.27 million out in 2030, and like what does it say for the end? It's like just under 5 million by 2036. Like 2036 is like just like a whole, like that's the seventh halving. That's where I picked what I picked as the end of the day. Like, the way that we're going and the adoption in Bitcoin, like, that just 4.8 million just doesn't not seem unreasonable to me at all for 2036.
That's and I do, and I love that a lot because there are people that call for $1 million Bitcoin for this year. Like, oh, like, no way. Like, and actually it's funny because your most bullish case with the 1% doesn't even get to $1 million Bitcoin this year. And I totally agree with that. I think if you call for $1 million Bitcoin in 2025, you basically call for the end of the dollar almost. There's something major happening.
Yeah. Or alternatively, so the critical point in this model is around 2 million liquid supply. So once you dip down below 2 million, then you're getting into supply shock territory. But one of the things, also, it's buried somewhere in this paper, but what happens even in the hyperbolic price increases, where your price just goes like literally hyperbolic, it's steeper than exponential. It like hits a U-turn and it just goes straight up. But even in hyperbolic price increases, like there was one scenario that it was like you get down to 2 million liquid supply in like 2030, and then the price, it starts to spread. You see that if you look at a chart, you see the upper bar starting to pull away, but it still takes 2 years before it really goes hyperbolic. So again, thinking supply shock and the drought analogy, you can see this drought coming from like miles away, and I think we're going to have lots of advance notice if we hit like a full-on supply shock, which, like you said, implies a collapse of the fiat currencies or the US dollar. I think there's going to be lots and lots of advance notice that we'll see this building over a couple of years. So I wouldn't, right now, this model is saying, and even without the buffer that the futures and derivatives markets bring, this model is saying that the earliest you're going to see a supply shock is probably 2030, 2031 in that range.
Is there any influence that you look at where when the US is now kind of looking at Bitcoin and the nation states thing? We talked about the strategy and the company side and the institutional side, but is there anything that you're like, okay, what influence and what demand equation does the US has on the strategic Bitcoin reserves potentially?
Yeah, I didn't look at that specifically in this, but now, so one of the cool things with this framework that I have now is that like everything you can change so easily. And so one thing I did build into here, which is roughly the equivalent of the U.S. Reserve, is what happens if we had a hypothetical quantum attack on all the Satoshi wallets, like 968,000 Bitcoin is what I assumed. And what happens, so imagine if you had 968,000 Bitcoin that were hacked and they were all dumped in the market in one day, what would happen? And so I took 2030, I think it was a July, end of June, end of July 2030 is the example date, and ran the numbers on that. And the supply side shock was actually quite modest, depending again on where liquid supply was. If liquid supply was 6 million or above at that time, you're like $1 million sale or dropping 1 million Bitcoin into the market would only move price by about 6%, 5.5%, 6%, I think it was. And then there's the similar would be true if somebody came in and did a sovereign buy at that time. It would be about a 6% influence. Now, you can imagine, though, what would happen if, every old Satoshi wallet got emptied at the same time and dumped on the market. The supply side shock might not be that bad if there's adequate liquid supply still on the market. It could be really high if we were already drained down. But the market side reaction would just be like insane. Like everybody would go crazy. And so there's an asymmetry between the supply side impact and the market demand impact. Market demand impact, I think I modeled it as a 50% decline in market demand, or in the market demand parameter. It's not exact, that doesn't go exactly to 50%, but it's a very large price drop that would arise because of the market sentiment, not because of the supply shock itself. And so what this framework completely opens up the ability to say, okay, what happens if somebody comes in and drops like 100,000 Bitcoin into the market or out of the market, or 500,000 at any particular time? And, whatever your birthday is, we could pick your birthday in like 2032 and say, oh, okay, like what happens if 1 million Bitcoin come into the market at that time? And we can have, based on supply and demand, we can say what that number would be. But we don't understand. We understand from the supply side what that would be. But again, with the caveat that we don't understand the futures market's integration into this yet. And also that we don't have the demand side down where we would be able to yet say, we can't say anything other than it would be really bad.
Yeah. How do you actually look at volatility coming down? I think in the past couple of years and the last 16 years, definitely volatility has come down. And there's an interesting thing where when you see the volatility of the gold price through hyperbolic phases, like it's gone completely parabolic up and down, and I sometimes can imagine the similar things happening with Bitcoin, where we now have diminishing volatility, but maybe at some point we hit like crazy phases where it goes up and down. Depends on like what's happens with the dollar. How do you look at like volatility in Bitcoin going forward?
Yeah, I think, and that comes back to the sovereignty first, stability first split. Are we sort of the team Wall Street versus team Bitcoin maxi. And if we're in an environment where there's no paper Bitcoin available, I think it's inevitable, almost inevitable, that we get increasing Bitcoin volatility as price goes up. I just don't see, when we get into the world of supply shock, there's just no way. It's going to be huge volatility, and that's very fundamental. I think we talked about this last time too. What happens from a supply and demand curve is you have this vertical supply curve that's creeping back towards zero all the time, and as it gets closer to zero, you're also into this area where you have a very steep demand curve. So, which means that like any small change in demand is going to move the price like disproportionately at very high levels. So from an economic fundamentals perspective, the answer is that we're looking at higher volatility over time. And that would be my view. But then again, the caveat is, well, what happens in the paper Bitcoin world? Does that adequately does that evolve so that it just absorbs that volatility? And that could well be the case too. So we have these diverging paths over time, and it very much depends which one we end up on.
Do you see paper Bitcoin as a potential risk, maybe even to Bitcoin long term, with the same thing that kind of happens with gold?
Yeah, but then, look what has happened with gold recently. Like, again, when you have paper Bitcoin or paper gold, maybe the price movement can be suppressed or manipulated for years and years, but then something else happens. And, in the context of gold, I mean, from the COVID time, the money printing that's been going on, we have the geopolitical tensions. We have all these, perfect storm type of things starting to come together that have led the breakout in gold. And I think there's a lesson there for Bitcoin as well, that even if it's a paper Bitcoin world, there are things that can go wrong in the paper Bitcoin world that cause things to break down. So, we've seen that a little bit in the basis trade too for the Japanese yen. Like it was like, it had been stable for, I don't know, decades, I think. And then all of a sudden it wasn't stable. Conditions change along the way. So I don't think going to, that stability first kind of trajectory doesn't rule out the hyperbolic price increases. But I think you need to look at the flip side all the time, that, do you really believe that the US dollar is going to collapse? And, that's maybe, but like hyperinflation in terms of the US dollar, like that's a really nasty, like messy world if we go there.
I agree. And I certainly don't wish it.
Yeah.
There's something, there's this other, like, I recently talked to a friend on that, where he said like, but now I get the money system a little bit more. And he's now concerned that, like, why doesn't go everything to bust tomorrow if the money doesn't rely on anything? And I kind of iterated to him that there are such bad currencies that are still around, like the Turkish lira, that are worse off than a US dollar or euro or any of those, where they are still around, people still believe in them. And then the second point of it is, we really don't want that. Like, we really don't want a hyperinflation where everything is crashing down, because if the US dollar is crashing down, all other currencies are also bumped. And there's like, how many fiat currencies out there? Hundreds. There's a bunch of them out there, and this is a situation that I don't wish for anyone, even if I'm a Bitcoin maxi and think like, probably I'll benefit somehow from it, because I have a thing that's actually worth something. But this is, I don't want to wish, like, that's something that I don't like.
Yeah. And so one of the other papers that I'm working on right now is actually, I've got a tentative title on it, Bitcoin Worlds. And so I looked at what the major cleavages are sort of that could influence Bitcoin's trajectories. And I actually just printed this off so I have it to read if it came up. Somewhere over here. So think of, we can have these cleavages that, like, you can go one way or another in a cleavage. One's liquidity and sort of market transparency, policy clarity, jurisdictional alignment. That's all one. Concentration of strategic holdings, sort of the macro energy stress that a country's under, trust and information, and credit leverage. So what I did, like six different things. If you go every possible combination, there's actually 64 distinct, call them corner solutions. And so I've got this paper right now about Bitcoin scenarios, and it goes through all these corner solutions. There's a number of them out of the 64, like there's 17 that are not, like they would only be transition states. They're not stable on their own. You can't have deep liquidity and, high investment levels and like really poor governance. Like it probably wouldn't work out that way. But there's a number of worlds that are possible. There's the balance of that, whatever the number is off the top of my head. I can't do the math. But all these possible worlds, which ones of them are actually desirable? And it turns out that only like 4 or 5 of them are really desirable. And they split again into the stability first and sovereignty first, where, on one side you have like very wide scale adoption and trust, but you don't have a lot of liquidity. And that's sort of where probably most Bitcoin maxis would prefer to see, or for them, that would be an ideal situation. Then on the other side is you have these very deep markets with liquidity, transparency, credibility, everything that goes with it. So the question starts to get into, well, how do we direct these things in ways that we want to see them going? Or how do we resolve conflict when there's some pretty fundamental disagreement sort of between the Bitcoin ethos itself and the way that it's going in the financial world, and are those two compatible? So I'm working on a paper right now. It's fully drafted up. I'm just going through and doing some polish on it, but it's actually going into a journal of political economy. So I'm really taking sort of the big picture in the Austrian economics versus the Keynesian and the institutional, and how the different sort of political views and play in, but with the ultimate message that like Bitcoin's not just this passing fad, that it's something that's being financialized right now. And there's a new world that's waiting out there, and Bitcoin's one element. And I think also back to the point about the collapse of the US dollar, that stable coins are going to be really important here. I can't say I don't have an opinion one way or another really on stable coins, or I shouldn't say that. They're not stable coins are not a research interest for me. Bitcoin is. But I think we're in this situation where you can see very clearly that the U.S. in particular is going to be using stable coins to expand to extend the lifetime of the U.S. dollar and to expand its use globally, and really sort of increasing the hegemony that's already the U.S. has an advantage on, or a disadvantage, depending on which country you're in.
Yeah, Bretton Woods 2.0 with Bitcoin and stable coins, I guess. They buy the Bitcoin and they distribute the stable coins.
Yeah. And so there's like, that's one of the reasons I sort of have problems seeing Bitcoin price going hyperbolic, is because if it does, then that falls apart. And, again, thinking into the future, well, you have to start thinking, well, what are the conditions? What are the necessary or the sufficient conditions that could lead to that? And I haven't gone through that part of the exercise yet, but to me, it seems like a pretty narrow pathway to like full Bitcoin hyperbolic price appreciation and the collapse of the US dollar. I have a hard time thinking how it could happen.
There's also one more aspect that I'm curious on what you think about that, because if you see if you see that governments and central banks are more and more aware, hopefully, about Bitcoin going forward, they also know that there's an alternative out there. And the same way, if there's an alternative, we saw that a little bit in social media, where if there's Nostra for Twitter, Twitter's aware of that. And Twitter was kind of the alternative for Facebook and Instagram in terms of censorship. This actually forced Mark Zuckerberg to make some rule changes. And he actually went ahead and changed some rules. For example, Bitcoin companies before couldn't really advertise on Facebook. Now they can. And there's noticeable difference now. And the same thing happens if the government knows if we print more money, we print it towards Bitcoin and alternatives, and we actually devalue it. And then it's like, okay, this might just forces people to be more responsible, as they know there is a completely alternative out there with Bitcoin, which might actually be good for the US dollar. I don't know. What are your thoughts on that?
Yeah, like people are so set in their ways, and you look at governments and you look at sort of the economics industry, as I would sort of frame the entire academic, the Keynesian, post-Keynesian. I mean, there's very set views, and we see this all the time. Like, how many economists are willing to change their views on Bitcoin? Well, I know of like maybe 3 or 4, including myself. Although I'm not a macroeconomist, so I never really adhered to some of those Keynesian views to begin with. I don't know. Like, it's maybe the only way that they change their attitude is sort of, it's like out of necessity. And that's one thing. You look where the US is going right now in this current political regime: stablecoins, Bitcoin, Wall Street integration. I mean, there could be a lot of impact in that. And then we get into this world of path dependency, where even if the government changes, like back to Democrats in 4 years, or maybe it will be 8 years. Think of what happens if it's 8 years. You're on a track that might not be reversible at that time. You're over some sort of tipping point. So these are all huge questions. I think they're all really important, but I certainly don't have an answer, and I'm not even myself really at the stage where I have an opinion on some of these. I just we're living inside this of this time, or this container in time, where we've just got such incredible change happening. And to people, like, and especially on X, we see it. This goes back to the point everybody freaking out over, like, at this price crash from $124,000 to $110,000, and we live inside these forces are moving, like technology and AI and Bitcoin and governance change and attitudes towards globalization and geopolitics. All this stuff is changing slowly if we look at it from a weekly or a daily basis, but like in the historic context, these things are just galloping along at absolutely full pace. And so we're trying to live inside this world that we don't really understand right now, and trying to figure out if people can be persuaded to adopt Bitcoin, or if they can be forced to adopt Bitcoin. I don't know. In game theory, there's what's known as coordination games. There's a whole sort of suite of coordination games where, and this might actually be in play. It's like if one country decides to go through and implement a certain type of policy, it changes the economics enough for the other countries that basically they come along of their own will. To begin with, they wouldn't do that. It doesn't make any sense. There has to, in a coordination game, there needs to be somebody takes the first move. So if you get the US taking this first move to really revamp into Bitcoin, stable coins, integrate it with the dollar, then it might be in the economic interests of other countries to jump on board anyway, even if they wouldn't have agreed with it earlier on. And there's a whole typology of coordination games. There's different types of it, but sometimes they're called assurance games as well. But there's an entire sub-discipline of cooperative game theory that studies these things.
There is this thing that I'm wondering about where there are small nations that might look at what, and I get that, like, as you said, I'm very much just the same belief. People are set in their ways and they're kind of blind to it. But at the same time, nations do look at what the United States is doing. And if there's a small nation now looking at, oh, okay, what is Donald Trump actually doing with this Bitcoin thing? And he plays with that idea to like buy Bitcoin and do the strategic Bitcoin reserve, or does that and that with Bitcoin. A small nation might go ahead and say, like, why don't we just front run the US?
Yeah.
Like what happens there?
Yeah, well, that might happen, but you also look at a lot of small nations and the governments within them. And, they're just these horrendous bureaucracies for the size of the nation. And decisions are not made quickly, or decisions are made that might be, there might be some moral hazard involved. I mean, like that people are making decisions that are more to benefit themselves. I mean, that happens within bureaucracies all the time. There might be people that are just not aware, like that are in key policy and science advisory positions. There's a whole field of climate diplomacy. So there's these like international relationships that go on between countries. So yes, it could happen that a small country, maybe, something that was like had a very tight governance structure, could do the front running. I mean, Bhutan, you look at Bhutan, that's because of the mining. If they decide to hold their Bitcoin over time, they're going to be in a very, very good position. El Salvador is like really sort of confused right now because of this IMF so I don't know if it's called a disagreement or sort of a conflict of views, but I mean, El Salvador certainly has the potential to get out in front of things. They already have, Bhutan already has, but somebody starting from zero, like for a small country to step in and say, okay, we're going to start up. Maybe that will happen, and it could be very, very good for the country. But, there's going to be fear politically and from within the bureaucracy that if you take these moves and they don't work out, or think back to El Salvador when El Salvador announced their Bitcoin law. What was it, like that very day? It looked like I swear the IMF was there to smack it down with a bunch of shorts in the Bitcoin market, because the price really came down quite quickly. And you get in how long can a small nation endure the political pressure if Bitcoin does just range sideways or drops off for a couple of years. So again, important questions, but look, I have no idea, and I don't even really have strong opinions on it right now.
Will be fun to watch. I think the next, I think your ending date was 2036, and I think in the next until 2036, the next 10, 11 years, will be very fun to watch the Bitcoin development. That's for sure.
Yeah, I think it will. It will be an exciting time, no doubt about that.
We have a question to ask each and every one of my returning guests, and the question is, what have you learned outside of Bitcoin since your last appearance?
Outside of Bitcoin, oh my goodness. I don't know. I don't spend much time outside of Bitcoin other than like my dog walks and things. I would say, well, I keep exploring more on the Buddhist side, which I think I had mentioned last time as well. I'm increasingly interested. Well, I'm just increasingly interested in sort of the futures and future trajectories and what's happening in the world generally, just because of the speed of changes. So, like, I think I've been deep into AI now for quite a while, and I'm just astounded at how fast it's going. And this has Bitcoin implications, but it really is much different. So especially at my age, like I'm looking at health advances and the advances in medical technology, and thinking about retirement systems. And like I live in a part of Vancouver Island where there's a lot of retirees, so I'm sort of in my own cohort here. But there's so many people that are just drifting and so unprepared in life, and with no idea of what's coming on the technological side and the social and the economic side. And I've been increasingly concerned that there's going to be a lot of people that are like sort of into retirement, don't really have many options, and all of a sudden they're going to be looking at lifespans that are expanding like quite quickly, and they might really be caught in a much worse life than they are right now. And I just get the feel that there's some social unrest and things happening there that could really be a problem as well. So don't know how to deal with that.
That's interesting. Yeah. That just comes in my mind of like the social unrest coming with a falling US dollar. That we talked about before that, and this is a whole new aspect that like you don't want to have that just because you said that. Yeah, but anyways, as you know, we have an end routine in the podcast where the previous guest is asking a question for the next guest without knowing who the next guest actually is. And the previous guest asked you, was up until now Donald Trump's political involvement in Bitcoin a net positive or a net negative for Bitcoin?
I personally think it's probably a negative. And the several reasons. I think my own personal philosophy would lean towards the more of the Bitcoin ethos, that the decentralization is important, that financial inclusion is important, that self-sovereignty is important. I think probably people that have like followed me at all know I'm an institutional economist, so very much about like using the rules for governance, but being responsible for your governance of society. So you are responsible. I think everybody is responsible for playing a part in that. And I think where we are with the Trump government, I mean, I think I don't know if I should go into this tangent. I left the U.S. So I worked down in Atlanta for a couple of years at Emory University, and I actually left the U.S. because of when Donald Trump was elected the first time. And people are going to freak out, but it's not really what you think. I was on an H-1B as a university professor. I was on an H-1B visa. And one of the things that before he was elected, he was talking about getting rid of H-1B visas. And so the whole ability to enter and exit the U.S. at will was really in question. Plus, I worked in the environmental field, so I knew that environmental research funds were going to be gutted. So I decided to take a job elsewhere. That said, if I was in the U.S. and an American citizen, the last election, I probably would have been one of the swing voters that would have moved from a Democrat vote to a Republican vote. And I'm not dissatisfied. Like, I look at what's going on in the U.S. now, and I'm not I don't view it as a danger. I think they're doing a lot of things right, but Donald Trump is a wild card. So my feeling is that this Wall Street integration is going to play out over the next 3 to 8 years now. And that it might be the stage where we hit a tipping point where we may not have the full chance globally to go back to sort of the sovereignty first Bitcoin paradigm. Maybe that will happen regionally. So that's sort of where I would sit right now. I'm a bit undecided, but I'm definitely not unhappy with what the U.S. is doing, but I don't think it's maybe best for what most Bitcoiners would really like to see.
That's a really interesting analysis. Because I think there's a lot of downsides since he came in. Obviously, it's great that the US president is talking about Bitcoin in a friendly way, and that a lot of the harmful things that maybe Biden did are gone, but also like the meme coins is something that really disturbed me, and it's like, why would you do that? And there's some other things that I'm like, I don't think, and all of the crypto friendliness in general, I think it's probably more harmful to Bitcoin. If a president is very unfriendly to crypto, weirdly enough, that's probably good for Bitcoin, because Bitcoin is the one that survives, and making that distinction between Bitcoin and crypto is important. So I don't know. I'm not in the US at all. I don't pay attention to US politics that much. I only hear from like the trade war things from my Europe thing. And I'm also against tariffs. I think free trade is probably the way to go. But I see like why he does it, and looking forward to how the US develops actually.
Yeah, well, I mean, the way I look at it is that, I've heard it said before that you don't take Donald Trump literally, but you have to take him seriously, and I think that's probably a good way. Like he's a wild card. Like he just says stuff, and like he has strong opinions about things, and he does things that like he changes his mind on. So he's back and forth all over the place on some things. But at the same time, you look into who his staffing choices are, and you look at, especially for the Bitcoin relevant staff, Lutnick and Besant, and whoever will come in to chair the Fed now coming up, and what happens in the SEC. Those, I mean, to me, that's all Wall Street financializing, and co-opting is probably too harsh of a word, but this adoption of Bitcoin into the mainstream, I mean, I think it's going to happen, and maybe all the altcoin stuff is just along for the ride. I mean, like I don't see a long-term future for any of it, and it just doesn't have the fundamentals, and yet you see there's a lot of opportunism, and like it's somewhat disappointing that to me that Bitcoiners are always complaining in the past about people that being close to the money printer that are taking advantage of it. Well, look what's happening right now. There's a huge amounts of money being made by people that are close to the Trump administration and flogging Bitcoin and all other types of shit coins around. So it's, I think it will be a difficult choice for Bitcoiners, actually. Do you really stick by the Bitcoin ethos, or do you just get sucked up and go along with the, Bitcoin is a Wall Street asset and I'm going to get rich off of it if that's the way it goes?
I think that too. Also, the narrative in Bitcoin is very hard. Like a lot of people fight on the narrative on Bitcoin, and that's a very good thing. Like having many people on like either side and fighting on it. But it will be very fun to see and watch. As I said before, the next 5 to 10 years will be very entertaining. So as a podcast host, I'm looking forward to that.
Oh, I bet you will be kept busy for years.
Yeah, I think so too. But yeah, thank you so much, Murray, for being on. Before I let you go, where can people find your research, yourself, and how can people ask you questions?
Yeah, well, I work for Satoshi Action Education. So Satoshi Action is one source. I have my own website as well. It's murrayrudd.pro, and I am on X at Dr. Murray Rudd.
Awesome. Thank you so much for being on. And also thank you so much for everyone that is watching and listening for joining us today. As always, I'll be back tomorrow with another episode. Bye-bye. This content is for educational and entertainment purposes only and does not constitute financial advice.